How's it going? Welcome back. I'm going to show you when I close out of call option contracts. If you watched my last video, I showed signs I used to open them up when I think the stock's going to be bullish and go run up. Now I'm going to show you when I close them, and there are some variables with this as opposed to opening the contracts. Closing them depends on your cash balance and other factors, how big of a play you went with, how much you have into it, how much you have cash balance in your account. So without me knowing those things, it's kind of hard to say exactly. However, the way I do it is, so if we were long, we got some of this DraftKings run up. I'll use DraftKings again because this is the one I showed when I would buy in. So when I closed out on this, just to give you an example, I think actually I got into it somewhere down here. But when I closed out on it, in my other example video, I said this was the green candle to get in on. Now, so if I'm long on a position, and it also depends on how long you have on your option contract. If you only have a week, then yeah, you want to close out real soon. If you have a month, 2 months, a year, you can first of all, I'd be looking at different charts. I wouldn't just look at 1 hour. I'd look at longer ones. If you bought in here and you have a year on it, then there's a lot more to look at. So potentially you'd get out here, but given if you have a whole year, then you have a lot more time and you could keep holding it. I'm going to say if you don't have a year, if you have a month or a couple weeks, then you're going to want to look at shorter term charts. But again, these indicators work for really any time range. So if you're in it, what I see is if I'm seeing it run up like this. So the MACD is good. It's over the signal. If you watch the other video saying how or when I open long call options contracts. So we're in it. It's made good gains. And then again, depending on your cash balance, how big of a position, you could at some point, start selling some of them if you have more than one contract. I won't get into that this video, but at any rate, this is where I'd sell basically. So the blue here is extended hours. You can't really trade in there, not options at least. This is where I sell though. So the RSI has been overbought right here, and then it still kind of runs up, but it's going slower, so the RSI comes down, which is good. That's good for bullishness. But then here in the after hours, you see right here the MACD crosses over the signal. You're getting these big red candles, and then these big red candles are going below your 9-day moving average. Your MACD is now crossed over the signal. It's now bearish. The red candles are now below the 9-day moving average as opposed to over here. So this red candle is a big red candle, dropped a lot, but look, it stayed above the 9-day. So you wouldn't get out there, you'd keep going, and for good reason. So then it keeps going up. On this one, I would see these red candles. I'd see below the 9-day. I'd look at the MACD. I'd say, okay, I think this is probably going to come back down. Again, if I had a lot of time with the contract, depending on cash balance, how many contracts I had, and I was very bullish on it, maybe I'd think, okay, it'll only come back down to the 180-day moving average, and it'll bounce off of this and use this as a support, which oftentimes happens. But this is when I would get out of it. On this trade, I think I did get out here, and I could have held it longer because I had until the 25th. This was September 11th. I had until September 25th. So in hindsight, I should have held it longer because it came down here, kind of consolidated, and then ran up like crazy even more. So it came up here. So yeah, on hindsight on this one, I should have stayed in it, especially because I had more time. If your contract's going to expire sooner, you could sell out. Or if you had multiple contracts at this point, you could just make it free, sell out enough contracts to cover your whole position, the cost of your whole position, and then just let the rest go. But yeah, so this kept running. Here, made another bull flag, kept running, and now this is today. So at this point, I would sell out, probably of all of it. Not only because we have this big red candle, the MACD, like I showed you, this candle's below the 9. It's further extended from the 180-day, as you see here. See back here, my mistake was it wasn't too far off the 180. It might have come down here, bounce, and come up. But here it's even further extended from it. Also, if you're looking at the actual market right now, The SPY is way down. It's been dropping the last 3 days, so this is kind of going with the SPY. So again, depending on how much time you have on your contract, you could ride it out, or you could sell some at the top and just wait a bit, buy in more even if it starts to reverse. But I would sell out. I would probably sell out here. I mean, because this is kind of a bear flag now. This big pull and then a flat kind of consolidation. Given this is DraftKings, it's kind of moved on its own a little bit. But yeah, that's when I'd sell out of my option contract. If you guys have any questions, make sure to comment down, like up, sub up, make your money happy money so it'll stick around. We'll see you next time. Next tip, trick video I'm going to give you is the difference between naked calls and clothed calls, or spreads, however you'd like to say it. Hopefully you guys aren't doing too bad with the SPY dropping, but yeah, this is showing some serious patterns of a bear market now. However, it is oversold, so you gotta be careful. But good luck, guys. See you next time. Thanks.